You're listening to AI Prism from Seoul Economic Daily.
It's Monday, May 11. I'd like to share some thoughts about real estate. Imagine waking up and realizing the government suddenly expects an 82.5% cut of your property gains.
Yeah, that is a pretty staggering number to wake up to.
Right. I mean, if you hold multiple properties in Seoul right now, that scenario just became very real. It basically halted the market overnight.
Exactly. The 4-year tax suspension evaporated on May 10th. So the capital gains tax surcharge for multi-homeowners is officially back.
And it specifically targets what they call adjustment zones, right?
Yeah, which currently means the entirety of Seoul and 12 districts in Gyeonggi province.
Wow. Okay.
And you have to remember, these are markets where your purchasing power is already heavily constrained by strict DSR and LTV ratios.
Right. The debt service ratio and loan-to-value caps.
Exactly. They strictly cap how much you can borrow against your income and the actual value of the property.
So it's essentially this state-mandated holding pattern. An 82.5% tax penalty acts as this massive damn it, just completely stops the liquidity flow.
Oh, absolutely.
Because, you wouldn't sell an asset if you're forced to surrender over 80 cents on the dollar. Which I guess explains why 1,581 Seoul apartment listings just vanished over the weekend.
Yeah, just pulled right off the market. Though there is one structural exception that seems to be holding up.
Oh, right. The properties under 1.5 billion won, which is about 1.05 million US dollars.
Yes, those might actually firm up a bit because buyers in that specific tier can still access up to 600 million won in financing.
So roughly 420,000 US dollars.
Right. That financing lifeline is really the only thing keeping that lower tier segment moving right now.
But for owners of larger portfolios, selling is penalized so heavily that they're pivoting to an alternative strategy, right? Just keeping it in the family.
They are, and the April data reflects this exact pivot. We just hit a 3-year high of 2,153 gifting transactions.
Wow, just gifting the homes. And geography plays a huge part here too, doesn't it?
It really does. The Gangnam 3, so, the core affluent districts of Gangnam, Seocho, and Songpa, they completely drove this surge.
Okay, but structurally, how does that shift the traditional market dynamics?
Well, normally, the Korean market runs heavily on jeonse. That's where owners take massive lump sum deposits from tenants instead of monthly rent.
Right, and they use that cash to leverage and continuously expand their portfolios.
Exactly. But now, instead of cycling those jeonse deposits to maintain leverage, owners are simply transferring the property deeds straight to their children.
Just to bypass that looming 82.5% sales penalty.
Yep, exactly.
But a housing market cannot function if nobody is actually selling anything. At what point does the government step in and thaw this freeze?
Well, they're actively floating some release valves right now. Land Minister Kim Yoon-duk is proposing some targeted regulatory tweaks.
Like what kind of tweaks?
The most significant one is creating exceptions for land transaction permits.
Oh, right. In highly speculative areas, you normally need direct government approval just to execute a real estate trade.
Exactly. So by granting exceptions specifically to non-resident single homeowners, the policy would create a legal pathway for them to sell.
Which theoretically forces some of that trapped inventory back into circulation.
Right, that's in the goal.
Even if they release a little inventory, though, the bulk of Seoul is still locked down by this tax dam. It makes me wonder, where does the actual liquid capital go if it can't move freely in the capital?
It has to seek the path of least resistance.
Right. It flows directly into non-regulated spillways.
Exactly. Look at POSCO E&C's new development, Songdo Grandterre. It's located in the Songdo IBD.
That's the master plan international city over in Incheon, right?
Yes. And because it is outside the adjustment zones, investors can completely bypass the heavy capital gains surcharge.
And they dodge those strict LTV and DSR lending limits, too.
Precisely.
Plus, the infrastructure timeline has to play a huge role there. The GTX-B Express Rail is slated for 2031.
Right, which theoretically cuts the commute from Songdo into central Seoul down to just 20 minutes.
That's huge.
Yeah.
But let's talk about the cost of that regulatory freedom. I was looking at the prices, and units there range from 1.245 billion to 1.318 billion won.
Yeah, so roughly 870,000 to 920,000 US dollars.
And the penthouses are hitting 3.3 billion won, or about 2.31 million US dollars.
Which actually marks the highest sale price on Incheon's record. You are paying a very heavy premium to operate in a normalized market without a tax penalty.
Yeah, clearly.
But, if we connect this localized flight of capital back back to the broader freeze in Seoul, it leaves you with a really critical question to consider.
What's that?
When aggressive tax policies create an environment where the most logical financial move is to just gift a multi-million-dollar asset rather than sell it on the open market, are policymakers accidentally engineering a permanent class of dynastic landlords?
That's today's AI Prism Real Estate.
Yeah.
This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a One IFRO award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.